What if the mainstream narrative around AI is missing half the story, pushing you towards overcrowded trades while true, overlooked opportunities are hiding in plain sight? Today, I'm talking about 6 hot AI stocks, some of which you might already know, but whose full potential, driven by disruptive AI advancements, is still vastly underestimated by the average investor. Let's dive. First up, we have Baidu Incorporated, ticker BIDU. This Chinese internet giant is a pioneer in AI, undergoing a pivotal transition away from its weakening search business towards diversified revenue streams. Macquarie recently upgraded Baidu to outperform, with a raised price target of $176, seeing hidden value in its AI cloud services, robotaxis, and in-house AI chips. The company's AI cloud business and growing investor confidence in its Kunlun AI chip have driven its stock up 57% year-to-date. Kunlun AI chips alone could constitute an estimated one-third of Baidu's valuation as shipments ramp, aligning with China's push for semiconductor self-sufficiency. Baidu's ambitious AI roadmap includes the launch of ERNIE 4.5 and the upcoming ERNIE 5, boasting enhanced reasoning and multimodal capabilities, with ERNIE 4.5 series becoming open source and ERNIE Bot freely accessible to all users. In autonomous driving, Baidu's Apollo Go service is expanding globally, partnering with Swiss Postbus for robotaxi trials in Europe, following successful expansions into Dubai and Abu Dhabi. Apollo Go has already achieved operational profitability in several Chinese cities, demonstrating tangible returns from its long-term AI investments. While trade negotiations and competition from domestic rivals present risks, Baidu's aggressive pivot to diversified AI-driven revenue streams and strategic global expansion efforts position it as a compelling play in the evolving AI landscape. Fifth on our list is Advanced Micro Devices, Incorporated, ticker AMD. AMD is rapidly positioning itself as a formidable competitor in the AI hardware space. The company announced a game-changing multi-billion-dollar partnership with OpenAI, where AMD will supply up to 6 gigawatts of its Instinct MI450 GPUs, starting in the second half of 2026. This deal includes OpenAI receiving warrants for AMD shares, aligning long-term incentives and solidifying AMD as a credible alternative to Nvidia in the burgeoning AI hardware market. Additionally, AMD has expanded its collaboration with Oracle Cloud Infrastructure becoming the launch partner for an AI supercluster powered by AMD's MI450 series GPUs. Further solidifying its position, AMD is partnering with the U.S. Department of Energy in a $1 billion initiative to develop 2 next-generation supercomputers utilizing AMD's MI355X and MI430AI accelerators for critical scientific research. While its stock has rallied significantly year-to-date, reflecting investor optimism, its elevated forward PE ratio suggests high expectations are already factored in, necessitating strong execution. The competitive landscape is intensifying with Qualcomm entering the AI data center market, potentially introducing pricing pressures, but AMD's established OEM ties and lead in several AI workloads continue to support its stock. The company's strong balance sheet, characterized by a low debt-to-equity ratio, provides a solid financial foundation for these aggressive expansion plans. Our fourth company is Oracle Corporation, ticker ORCL. Oracle has undergone a significant transformation, largely driven by its aggressive expansion into AI and cloud infrastructure. The company reported a substantial 28% surge in cloud revenue, reaching $7.2 billion, and a staggering 359% year-over-year increase in remaining performance obligations, hitting $455 billion, fueled primarily by multi-billion-dollar AI cloud contracts. This backlog offers exceptional visibility into Oracle's future revenue streams, with management expecting RPO to exceed $500 billion soon. Oracle has secured monumental AI deals, including a reported $300 billion 5-year contract with OpenAI and a $20 billion cloud computing agreement with Meta, positioning itself as a dominant force in the AI compute landscape. The company is also investing heavily, committing $35 billion in CapEx for fiscal 2026 to build 37 new multi-cloud data centers. While some analysts express caution regarding Oracle's valuation and potential margin pressures in the intensely competitive cloud and AI infrastructure markets, Its aggressive strategic positioning and substantial contract backlog suggest continued momentum in these high-growth sectors. Are these ambitious capital expenditure plans a smart long-term bet or a potential drag on short-term profitability? Next, let's shine a light on Alphabet Incorporated, ticker GOOGL. Alphabet is making massive strategic investments to solidify its AI leadership across its core businesses. The company is projected to hit nearly $100 billion in quarterly revenue, driven by robust sales growth and a staggering $85 billion in capital expenditures for 2025, primarily focused on AI infrastructure. Google Cloud is a critical growth driver, with revenues expected to surge by 29 to 30% year-over-year, fueled by strong demand for AI infrastructure and partnerships, such as the expanded collaboration with Anthropic, which leverages Google's custom tensor processing units. Google's core search business also continues to benefit from AI integration, with features like AI overviews and AI mode, driving user engagement and sustained advertising revenue growth. While a recent U.S. antitrust trial affirmed Google's illegal monopoly in online search, the ruling avoided a structural breakup, which was largely viewed as favorable by investors, contributing to a 9% surge in shares post-ruling. However, ongoing scrutiny under the EU's Digital Markets Act poses potential risks of substantial fines. Despite regulatory headwinds, analyst sentiment remains largely positive, with firms like Oppenheimer raising price targets to $300, citing optimism around Alphabet's AI advancements and favorable valuation. Moving on to our second hot AI stock, Nvidia Corporation, ticker NVDA. Nvidia remains the undisputed titan of AI, but its strategic moves are far from static. The company recently made a monumental $1 billion equity investment in Nokia, acquiring a 2.9% stake to accelerate AI-powered networking solutions for the upcoming 5G Advanced and 6G eras. This partnership will see Nvidia's chips enhancing Nokia's RAN software, paving the way for AI-native wireless networks. Furthermore, Nvidia is collaborating with Oracle and the U.S. Department of Energy to build the nation's largest AI supercomputer, featuring an unprecedented 100,000 Nvidia Blackwell GPUs. This underscores Nvidia's aggressive strategy to embed its AI computing platforms across diverse industries, with projected global data center capital expenditures skyrocketing to between $3 trillion and $4 trillion by 2030, and sovereign AI revenue expected to more than double this year to over $20 billion. Nvidia's growth runway is immense. However, emerging rivals like Qualcomm are introducing new data center AI chips, signaling intensifying competition, though Nvidia's robust CUDA software ecosystem remains a formidable competitive moat. What do you think? Can anyone truly challenge Nvidia's lead in the AI hardware race? Finally, let's talk about Meta Platforms, Incorporated, ticker META. Meta is aggressively executing an AI-first strategy, integrating superintelligence across its entire family of apps: Facebook, Instagram, WhatsApp, and Threads. While many focus on the metaverse, Meta's immediate and impactful AI innovations are driving substantial revenue growth in its core advertising business, which accounts for approximately 98% of total revenue. AI-powered recommendation models are already boosting conversions, and generative AI features are significantly benefiting smaller advertisers, expanding Meta's reach and monetization capabilities. The company anticipates an unprecedented $66 to $72 billion in capital expenditures for 2025, nearly doubling the previous year's spending, primarily funneling into AI infrastructure, chips, and advanced data centers like Hyperion and Prometheus. Though its Reality Labs division still incurs losses, the tripling of Ray-Ban Meta glasses sales in the first half of 2025 shows nascent progress in immersive experiences. A recent restructuring in its superintelligence unit, involving around 600 job cuts, underscores a lean, agile approach to AI deployment. While competition for ad dollars and regulatory pressures remain, Meta's consistent ad revenue growth and massive AI investments are positioning it for a prolonged period of dominance. Looking at the numbers, it's clear that while all 6 companies are driving the AI revolution, their financial footprints and scale vary dramatically. Starting with market capitalization, we see a vast range from Baidu, at a robust $34.5 billion, representing a significant player in the Chinese market, all the way up to Nvidia, a colossal $4.7 trillion titan dominating the global AI hardware space. Meta Platforms and Alphabet also stand out with their multi-trillion-dollar market caps, showcasing their immense influence and established positions. When it comes to current share price, Meta at $738.36 is the most expensive, followed by Oracle and AMD, while Baidu remains the most accessible on a per-share basis. A quick glance at profitability metrics shows equally interesting insights. Meta boasts an impressive EPS of $27.61, indicating strong bottom-line performance despite massive AI investments. Oracle and Alphabet also deliver solid earnings per share, reflecting their mature and highly profitable operations. On the other hand, Nvidia and AMD, while critical to the AI infrastructure, show lower EPS figures, often indicative of heavy reinvestment into R&D and scaling their cutting-edge technologies. Interestingly, gross margins vary, reflecting their strong pricing power and efficient operations. This table truly highlights the diverse opportunities across the AI sector, from established behemoths generating substantial profits to aggressive growth players reinvesting heavily for future dominance. So, these are 6 hot AI stocks with immense potential, each with its unique drivers and risks. Which of these 6 AI powerhouses do you believe has the strongest long-term growth trajectory, and why? Drop your thoughts, insights, and any other AI stock picks you're watching in the comments section below. And don't miss our video right here on 9 best semiconductor stocks to buy in 2025. Click on this video here.